Super important. I've been wanting to do this for so long to help so many contractors in the United States understand, number one, what the heck is a dealer fee or a merchant fee? And what does it mean? And is it important? How does it work? And how do you build them in your business? And how do you maintain profit margins? And is it a negative thing? Or is it just reality? Well, it's reality. Money costs money to get from Wall Street to a lender, to a contractor, to a consumer, then consumer back to servicing, and back to a lender maybe, and then back to Wall Street. Hakuna Matata, the circle of life. Money costs money. Always has, always will. So, with that being said, how does it work in home improvement lending? What is it? How do we calculate it? And why is it a positive and not a negative? And I see the ads running all the time. These brokers that act like they're home improvement lenders that are not, and they know who they are, and I'm not going to name who they are. They're brokers. They're sending a credit app with a soft credit pull to personal loan entities, and they're giving them interest rates up to 38% in a 5-year term, and it's criminal. Yet that's their business model. These are the same personal loan things that you get in the mail that say you're qualified for $37,000. They don't know who you are, what you are, nothing. You haven't applied yet. They're telling you you're qualified for $37,000. What they didn't tell you, it's a criminal interest rate. So these home improvement brokers are out there touting, no dealer fees, come and roll with us. It's baloney. Don't do it. You need a better solution, call us. We'll help you out. So let's dive into this. Oh, let me make my head a little bit smaller. We don't need to be that big on the screen. All right, cool. So what is a dealer fee? What is a dealer fee anyway? So it's a lender or merchant fee, referred simply as dealer fee or merchant fee. And they usually come in parentheses on a matrix. So when you choose a program, there's an associated dealer fee with it. And you've got to do some calculations to pass on to your consumers so they pay for merchant fees and dealer fees within the price of the contract. It's the price to facilitate the loan from Wall Street. Let's just call it what it is. The cost of money, cost to incur the money to get it out to the marketplace. And again, get it back to the marketplace, back to Wall Street. Just like in the mortgage days. It goes through a circle. It costs money to do that. The lenders have sales reps, and it's just the cost of doing business. It is what it is. It's the same darn thing that the grocery store does with the credit card swipe fee for the milk in the back of the aisle. Now look, when you go buy the milk, it's $4.98. And when you get up to the cash register, the lady doesn't negotiate with you. Hey, are you going to be paying cash, check, or credit card? Because we've got 3 different prices. The cost is the cost. So if it's a 3% swipe fee on your gallon of milk that's $4.98, it is what it is. It's built in the cost of milk. Dealer fees and merchant fees are built into every single thing that we buy on Amazon and everything that we do. It just is what it is. It's the cost of that. So why should it be any different in home improvement? Well, it isn't. But learning how to actually build it into the price of your contract is super important for profitability and margin integrity and being competitive. And I'm going to talk about today why our program is different in Improvifi and how we can help you be more competitive. So the dealer fee compensates the lender for the administrative work, as I just explained, involved in originating. They bring it to the marketplace, comes out, and then the servicing of it, because your customers have to make payments back, like we do on our auto loans and on our mortgage. It goes to a servicing department, customer service, and managing that entire life cycle until it's paid off with no prepayment penalty. I don't want to pay dealer fees. Cool. Well, I don't really want to be Scottish, 5'10", 235 pounds, but I am what I am. And it's the cost of doing business. So I think we just have to accept the fact that dealer fees exist, and we need to have financing. We have to offer financing early, always, and often in our business to be competitive in the marketplace, to help people with affordability, the point of sale, because nobody can afford their groceries or gas. So it is what it is. Deal with it. Bite the bullet, and then figure out how to build it in your business and structure it. So the fee is typically structured as a percentage of the total loan amount, and that percentage can vary based on the lender and the terms of the loan and the borrower's creditworthiness. A lot of stuff there. So all these lenders out here, indirect merchant lenders, which is the best lending, by the way, whether you're with a competitor of mine or not, I don't care. Thank you for offering financing. Now what happens is you'll look at these matrices, you'll see these programs, you'll see these dealer fees, and you throw your hand up in there and go, this is horrible. Why? Well, because they're looking at a 4.99% 10-year that costs 26% dealer fee. If you're in home improvement, you shouldn't be offering that. You don't need to. The market doesn't bear that. The market's bearing anywhere between, 8% maybe to 12.99 right now. That's kind of the comfortability of the marketplace where people are happy, and you're still getting a low payment factor, which gives you an affordable payment solution at the point of sale. What the heck is a payment factor, Scoville? Well, a 9.99 on a 10 years, a 1.32 payment factor, which simply means this. For every $10,000 that's funded on a 9.99 120 term, it equals $132. Why? Well, because these are simple interest loans, so they're super easy to calculate for your sales reps at the point of sale, and we will teach you how to do that at Improvifi Program Training Center. That's what we do. We just don't enroll you and say, hey, good luck. I hope it works out. Have a great day. We actually coddle you and train you and give you go-to-market strategies to set you up to be successful, and that's why we are different. Okay? So that's the structure. If you have any questions on this, reach out. I'll walk you through your current program, whomever you're using as a lender, and walk you through how you can do it better, tell you what programs not to offer. I used to call it matrix flow and margin integrity, where I could position these in the sales process better to help you close more, help more homeowners, and keep your dealer fees low. Because you're building these fees into the cost of the goods that you're selling. Let me just make a quick example. Our dealer fee is only 2% over here. Oh, look at that, balloons. It's 2%. So you're going to build that into the price of goods, and let's just use simple factoring today. $10,000, I add $200, I sell my item, my roof, my generator, for $10,200. The lender takes $200, I get my 10 grand, everyone's happy. The consumer's super stoked because they have an 18-month same as cash or a low monthly payment option for the next 20 years. Ooh, that was hard. It's not hard. But I had a guy yesterday, Chris, but if we add dealer fees, we're not going to be competitive in the marketplace. Dude, if you don't offer financing, you ain't going to be competitive in the marketplace. It's $200 and the consumer pays for it. So $200 knocks you out of the marketplace. Dude, you got something more wrong than dealer fees and pricing. You got a business problem we need to solve. If you think that increasing your prices 2%, 5%, or 10% is going to knock you out of the business, you got bigger issues than dealer fees. You got a business deficiency. You got a mindset deficiency. You should be the highest priced contractor in your marketplace because they will assume they're the highest price is the highest value. Plus, you need to deliver upon that, given those results. You're worth it. Raise your pricing. You're worth it. Listen to Tom Reber over the contractor fight. He'll swear at you. I'm not going to swear at you. I'm just going to tell you that you're worth it. Raise your prices. ABC and Beacon don't have a problem raising their prices and tell you got a price increase. What do? Do you take it on the kneecap and say, oh, geez, thanks, distributors, for increasing our prices. We're going to lose 7% or 3% or 5% this quarter? No, you increase your prices, you go out and sell. You don't stop business because this happens. It's the same thing with financing. You build it in your pricing and you go sell. Whoa. Payment. The fee can be paid to the contractor or passed to the homeowner as part of the financing cost. I just said this. Sometimes it's incorporated into the interest rate and finance amount, meaning over the homeowner doesn't pay for it up front over the period of time. I just explained how this works. If you're paying a 2% dealer fee across the board from 2 years to 20 years and $2,000 to $150,000 like our program in Improvifi, you're just going to adjust your price margin between, the 12-month same as cash, which is 5, and the standard term between 2 and 20 is 2. Let's add 3.5%, call it a day. Let's add 3%, call it a day, because that'll cover the cost of swiping credit cards too. So if I'm selling a $10,000 roof today cash, my new price next week with financing is $10,300. Boom, call it a day. Let's go sell. It's that easy. When you hop on the phone with us, you go through our go-to-market training sessions, you have a consultation with me, I will set you up to win. Be successful, offer the best programs in the United States of America, help more homeowners at the point of sale, offering secured and unsecured financing and credit card payment systems so you can help more homeowners with affordability. Oh, and you can market in an advertisement too. I'll teach you how to do that, because winning ads is not saying outdoor decks from $29,000. Your winning ad should say 100% financing, low monthly payment options, soft credit pull, apply today. It should never be rates from X. Contract from here. It should be low monthly payment options, 100% financing, 18 months same as cash. Like, it should be promotional to drag their attention in, which is what Ashley Furniture does. Ashley Furniture does not sell, look at our furniture, it's so much quality and it'll last forever. No, they don't sell that. They say, come on in, buy a bunch of crap, and don't pay for it for 5 years. And then you go to Ashley Furniture, instead of buying the Lazy Boy, you buy the entire home, because now you don't have to pay for it for 5 or 6 years on their promo. By the way, those furniture places are building in about 17% dealer fees into the price of that furniture. What? Why? Well, those promos are expensive. The lender is buying that down for Ashley Furniture and City Furniture. It's called a rebate. They're building it in. They're spreading it out over the entire term of that furniture. By the time your furniture is dead, you haven't even paid a payment on it. It's scary, but it's reality. It is what it is. So, hey, how do you implement this? Well, you don't have to bear the expense. You're going to build it into the pricing just like you do for your credit card processing fee, into the cost of your contracts. And to do that, it's very simple. I've given you some calculations here. Look, you can factor it the way that I do it to make it exact. So you do your zero cost averaging. I'll teach you how to do this in the program training. Or listen, if you've got a 2% dealer fee and your credit card swipe fees around 3%, build 3% and call it a day. You can get very specific, but if you have healthy profit margins, you don't need to be super specific. But there's companies out there that are doing $150 million a year in financing. They need to be very specific. The private equity groups that we work with, they need to be very specific. So we're going to factor it for them and tell them exactly what they need to build in to be super profitable, maintain profit margins, and sell more jobs. Okay? Cool. Next. Ooh, hopefully you're seeing this. Hopefully you're writing this down. Hopefully you just took a screenshot. I'm going to give you a chance. Screenshot. 5, 4, 3, 2, 1. That's not the right way to count down. That hurt. All right, cool. How are we different? What does Improvifi do differently than the marketplace? Well, our dealer fee is only 2% flat from 600 FICO, that's super subprime, all the way up to 850, which is called super prime. So we'll have people with challenge credit, to prime credit, to near prime credit, to super prime credit. That entire scale will help at the point of sale. We go from $2,000 all the way up to $150,000 of unsecured funds. We go from 2 years all the way to 20 years. 20 years is a big deal. Why? Well, because the longer the term, the lower the payment option. We also have no dealer fee programs. So if you are just like, Chris, I am not going to build 2% into my pricing, fine. Use our no dealer fee program. We go from $15,000 all the way up to $400,000 with that particular program. I am not going to build 2% of my pricing. I will lose. No, you won't. You're going to lose because you're not offering a promotional loan. You're going to lose because you've got a limited mindset, a scarcity mindset. That's why you're going to lose. But if you insist, I'll just give you that program until you start selling and going, man, we need to offer the 18 months same as cash. We need to offer the unsecured loan so we can compete in the marketplace. Or you can continue to do what you're doing now and do nothing. Your choice. Cool. That's it. Short, sweet, under 15 minutes, education on how dealer fees work and how you can build it in your business to help more homeowners at the point of sale and stop whining about dealer fees. Now that you're educated on what they are, it's a limited mindset to say, I don't want to offer financing because the banks charge us money. The banks should be paying us money for bringing them customers. Baloney. That's 2024. Go offer financing. Sell more jobs. If you need help, reach out to us. We do things so different in Improvifi. We've got credit card payment systems. That's the swipe. Boom. Approved. Unsecured lending. You've just seen our program. It's unbelievable. It's awesome. Secured lending, no dealer fees, $15,000 all the way up to $400,000. Business lending, lines of credit, equipment loans, SBA, anything to operate your business capital, and then a training center to help train your team on how to sell and facilitate the transaction at the point of sale so you can sell more jobs. That's what we do different in the marketplace. We're here to help you, help more homeowners at the point of sale. If you're interested, reach out. We'll set up a one-on-one with myself or one of my teammates here, and we'll help you help more homeowners at the point of sale. Have a blessed day. Bye.